One of the questions on people's minds is, if I participate in terrorism-free investing, am I going to lose my returns? Am I going to not be able to compete with normal investment returns? And the answer is no. Terrorism-free investing has been around long enough that there's periods of time, for example, where it's actually outperformed the competitive major stock indices. And there's times, just like anything else, where it'll slightly underperform. But over a market cycle, the performance basically is right there with the major stock indices. It gives people comfort that they can follow their heart, they can follow their conscience, do the right thing, and not have to compromise their returns on their investments, which are very important. There's a risk management component to terrorism-free investing that many people aren't aware of, and that's called global security risk mitigation. And global security risk basically is the risk that a company takes by doing business with a state sponsor of terror. And the reason there's additional risk with doing business with a state sponsor of terrorism is that this country may very well be subject to economic sanctions. There's a greater likelihood that you're going to experience civil unrest, and that they're basically going to be economically isolated from the world. And if that's the case, it always leads to diminished business and lower gross domestic product, and basically a struggling economy. And if you're doing business with these people, then it's very likely that you're going to suffer. So the SEC in the early 2000s made a law basically stating that public companies need to report and divulge their business dealings with any country that's on the US government state sponsor of terrorism list, so their shareholders can know, go in with eyes wide open, I'm taking some extra risk by owning this company.